Hey, what's going on, everyone? Welcome back to another video. Today, we're going to be answering one of the most common questions on our social medias. And do you have to be rich to start utilizing whole life insurance the way we practice? And I guess that's what we're going to answer today. Do you need to be rich to start utilizing the strategies in which we teach with whole life insurance?
No. Shortest
Simple
video
answer.
ever. We're done.
Shortest video ever. Yeah. So that's about it. So make sure to like,
thanks everybody.
Make sure to like, comment, and subscribe.
I mean, to expand on that a little bit, one of the things that I always say when I'm talking about whole life policies is yes, if it's a bigger amount of premium that's going into these policies, the results look better because they're just bigger numbers, right? Mm-hmm. But at the end of the day, if you're looking at your cash flow and you recognize that like every single month or every single year, I have X amount left over. And if that amount is 1,000 or that amount 10,000 or that amount is 100,000, what does it look like if I put that into a whole life policy? Mm-hmm. Right. And obviously if it's 100,000 a year that you're putting into a policy, that's going to look much better. But at the end of the day, its ratio is probably about the same. So a $10,000 policy would look more or less the same, just with one less zero all the way along. And same thing with $1,000 one. So that's why we say, no, you don't have to, because the question is more about where does that $1,000 go? And the reason why rich people use this more often is because they generally have more available cash flow, right? When you're not wealthy, there's not a lot left over at the end of the year, or there's none, right? And so it's harder to sort of find people that are in that situation that have that available cash flow. What you don't want to be doing is locking away money that you need, right? Even though there's liquidity in these policies, as we know, it's a long-term strategy. So it takes a while for them to get up to the point where every dollar that you've put in is now available. And if you really need those dollars, you might not want them to not be available, even for that 4 or 5 years that it takes. And again, you probably have access to 70% of it, usually in the first year. And then
it's like 65 or no, well, it varies on everyone. It varies on, I can't say a specific number because it does vary on everyone that you do, because it goes from your health to your age, and
the company that you're doing it with, how you've structured the policy. There's there's a reason why they call it infinite banking, because there's an infinite number of varieties of how you can set it up and an infinite number of ways it can be used.
So and it's like, why do people rent homes versus just buying one out? It's like their personal situation varies. It's like, why would you just rent life insurance when you can build equity in some of these? Because there's some benefits to renting it versus there is to actually owning a policy. When you have term insurance, you're just renting life insurance. You don't get any equity built up in it. You can't leverage against it, whatever. But with the whole life insurance, you have to think longer term. You have to have longer term vision for your financial situation. And it's not going to work for you instantly. I mean, you can access your cash value right away, but maybe you had to purchase a home, in the next year. You do have to decrease some of your funds in order to leverage. So it's like, does it make sense for your personal situation or not? So that's why it's super hard to answer like any question, because it does vary for everyone. So that's why it comes down to cash flow. So if you have access to, you see consistently that you're able to save $10,000 each and every year, and you're not going to touch that money. Well, that's where it makes sense. When you have that consistent cash flow, where you'll have access to this to do whatever. It's like, well, why not make it work as efficiently as possible in a vehicle like this? Because you still have liquidity to a certain extent, and if you're not going to utilize it, you might as well put it somewhere where it's going to grow, and then down the road you're able to do more with it, whatever you would like, really, whether that's pay expenses or invest it down the road.
Yeah, I'm glad you talked about how difficult it is to answer these questions, right?
Yeah.
Because, I mean, in one way, it's actually really easy to answer them, because it's the same answer to every one of these questions. It depends.
It does.
Right? And
Yeah.
and there's a reason why insurance is sold the way it is, right? It's like you and an insurance professional sitting down, going over your situation, because again, all of those different variables that come into play are going to determine, product fit. And there's a really big element of the insurance industry around compliance and making sure that the right policy is put in place for the person, for their individual needs. And again, what are you planning on doing with it? Like, is it just straight up an estate protection plan? Am I wanting to access that cash value as early as possible, or am I wanting to access it for retirement? Am I not sure? So there's ways of structuring these things that make it a little bit better suited for each one of those scenarios. But at the end of the day, it's not about the amount of money that you're putting in. Right. Obviously it is in a sense, because the more you put in, the better it is. But if you're just getting started, a really good thing that we do with a lot of people, especially, if they're people that we see a super bright future for, right? We can say, okay, well, right now you can only afford this much. So let's start with something small.
Absolutely.
And, we put some like a term rider in place, right? So a little bit of term insurance kind of attached to this policy. And what that does is it protects your insurability. Because down the road, maybe you're young, you're just starting out, you don't have a family yet, insurance isn't really a big deal, and you don't have this big cash flow problem where it's like, oh, what am I going to do with my inflation is eating away my funds? Well, no, it's not, because you're spending all of them because you only have a little bit left over because you're just starting out. But down the road, we know you're going to have that problem. Right? Like, you're just starting out, but you're just starting out in your medical practice, and you're paying back all these loans and everything. But once those are done, hopefully, if you don't follow the trajectory that a lot of doctors do, which is they get big houses and extravagant cars and everything like that, you could be in a really good place 10 years from now. But we need to start you off in a situation that's going to allow you to grow into that policy.
Yeah, I like that you brought that up, and this will be one of our final points here. But I've put, people sometimes don't want the term insurance for whatever reason, doesn't really matter. But I've definitely started people off with really comfortable starting points. Like, they could afford, these huge $50,000 ones, but they just want to see this concept work. So, and vice versa. I've also seen people who, put in more money than someone who could afford a lot more than them. And it still works for them. Like, it's how much it also comes down to the reason why a lot of people say, oh, only the wealthy can use this, is because they do understand money in a better sense than the average person. They understand OPM, which is other people's money, leveraging debt, you name it, they understand it because they have to, because they have bigger problems they have to solve. And that's why you see a lot of wealthier people using this concept, I think. But that doesn't mean that someone who's on the come up to wealth, like someone who wasn't born into it or doesn't have a big company, can't utilize it. They have to understand the basics of money in order to utilize it, because if you're not utilizing the policy loans, or you're not utilizing the cash value you have and you're just letting it grow on its own, it's like your money will do much better in a different vehicle. It will. It just will. It's like, yeah, it's safe and protected. And if you're going to have life insurance, you might as well, if you're looking at it from a wealth standpoint, you might as well build equity in it. But if you're using it specifically for that cash value to, get the insurance company loans for yourself to, build more wealth, it's like, if you're not utilizing it, you might as well put it in the S&P 500 or in some higher earning, income generating asset, instead of just letting your money sit there. Right. So that's why I think, don't get me wrong, doing something with your money is better than nothing. But for the people who want to build wealth, you have to understand how to utilize it. And that's why the wealthy do it better than the average person, because they understand how to utilize it. Right. So
it's a good point, Matt, because a bigger portfolio means that you're going to have some component of that already in fixed income.
Yeah.
Right. And if you're comparing whole life insurance to whatever fixed income you've got in your portfolio, like it's a no brainer. But but this person that just has $1,000 to $10,000 extra every year, if that's all you've got, you're probably going to try and max it out. And that's why you're going to shoot for the, for the fences, and you're going to, go into the stock market or go into crypto or something like that, which is maybe not necessarily the best approach. And a lot of people don't actually plan that out with a professional so that they can actually understand the ins and outs of the choices that they make.
So, yeah, I mean, I hope that answers the question. If you're limited on cash flow, it's definitely something that could work for you, but might not be as optimal if you have, a surplus of cash flow that you'll always have each and every month or each and every year. So that's something to look out for. That doesn't mean you can't get started. So if you want to get started, I'm not holding you back, or we're not holding you back. You definitely can. But it's good to, have a basic understanding of financial literacy. Is there anything else you want to touch on with that, Dean?
Yeah, I mean, the other thing I was going to say is, we really enjoy doing videos like this where we're answering questions that people have. So we'd love for anybody who's watching this, if you have more questions, if you have a topic you'd like us to cover, throw it in the comments, and we'll do more of these sort of just really quick one-off answer a question type video, which this has been fun. I'm enjoying it.
Awesome. All right, guys, make sure to like, comment, subscribe, and like we said, comment down below your questions, because we do really like answering them. But that's going to be it for today. Have a nice day or night, whenever time it is. Peace.
Cheers.